Turning to the bond market moment, we have trader Todd Colvin of MarkIV Brokerage standing by. Todd, you are in the bond market on a daily basis. Are you noticing any signals coming from the bond market about the government shutdown and the disruption to government operations?
We started the shutdown. We were trading around 415 in the 10-year. We saw yields move lower, which is typical, right up until October FOMC. They got their rate cut. They got the end of the balance sheet runoff. However, we did not get that forward guidance, which would give us, or at least guarantee us, more rate cuts moving forward. The Fed chair kind of pumped the brakes on that. And that is when we saw yields moving higher back towards the midpoint of the range since the shutdown began. Now, right now, the market wants clarity, obviously in the form of economic data, but also with the announcement of the quarterly refunding later today and with next week's refunding. What is the demand for Treasuries going to be if we continue to see this shutdown extend further and further? So right now, the bond market, not only does it want clarity so it can continue to project where rates are going to be moving forward and how the Fed might behave, but also for demand for auctions moving forward. So right now, we are hovering at the midpoint of the range, right around 408, 410. I think to the upside, 420 is still your level. We haven't really seen a sustained trade there north of that level since going back to early September. To the downside, it's at 395. We've dipped our toes below it a few times, but haven't seen a sustained trade below it in almost a year. So ultimately, we are hovering and waiting for clarity. The bond market is thirsty for it. Will it get an end to the shutdown, which will allow the progress to move forward? Obviously, we'll have to wait and see.